Hey guys, it's Kim here at OC Tax Break. I am an enrolled agent and I have my master's in tax law. And today we are going to talk tax. Our subject today is going to be rideshare. What deductions can a rideshare driver have? Well, first off, you can either write off your standard mileage or you can do your actual expenses, which is gas, oil, insurance, registration, repairs, maintenance, and your lease or depreciation of your car. Now, what I always tell everybody is talk to your tax person first if this is your first year in rideshare, because that first year is super important. You can either take that standard or actual expense, but in your first year, if you take the actual expense, you'll never be able to go back to that standard mileage. If you take that standard mileage the first year, you can always change later on to your actual expense if you do an analysis to see, hey, actual expenses is actually going to give me a bigger deduction. I want to go that way. You can always change, but you can't go back from actual expenses to standard mileage for the duration of that vehicle. So keep that in mind when you're picking which one you're going to do. And I also want to let you guys know, I always tell my clients this, for the first of the year, January 1st, take a picture, write down what your mileage is so that if you are doing that standard mileage, you have like a record of it. And then also on 12/31, the last day of the year, take a picture as well so that you can see, hey, I went 10,000 miles for the year, 20,000 miles, whatever it is, you can make sure that you have it documented. So if you were ever audited, you have that information to provide to the IRS. The standard mileage rate for 2020 is 57.5 cents per mile. So if you go 10,000 miles, you have a deduction of $5,750, which actually isn't too bad. I always say too, make sure that you look through your expenses if you're gonna go the actual expense rate. Now I have people who are like, oh, I have a lease, I paid $5,000 for it. Can I write off that full $5,000? If you use that vehicle 100% for business, sure, definitely. If you didn't, you're gonna have to allocate a percentage. So keep track too of I'm, driving 50% business, 50% personal, so that you know what percentage to allocate to these expenses to see what rate's higher for you. Other deductions that you can take are your actual cell phone, the bill plan for your cell phone every month, any apps that you use, and I always suggest if you're using that standard mileage rate to get an app to keep track of those miles so that you are you have some sort of verification for if you were audited. Any chargers or accessories for your phone, tolls, airport fees, parking, transponders. Do you offer bottled water, snacks to your clients that are coming in the car? Any Uber fees, and I know Uber takes out a lot of fees, so those are deductible as well. Floor mats, car tool kits, if you have like a pressure gauge, a first aid kit, any flares, any other supplies that you're using. And do you have AAA or any roadside assistance? All that is deductible as well. And just make sure, again, keep receipts. I tell my clients this all the time. Make sure that you have a plan. If you were audited, and again, the chances of you being audited are less than likely unless you show a ton of red flags, and that'll probably be another video that I do is red flags for an audit. But don't be scared of an audit. Why would you not want to write off deductions that you have if you actually have them? Make sure you keep those receipts, and if you are an audit, if you do have an audit, you have everything. It'll be easy peasy, and you'll go, your separate ways with the IRS after you show them all your stuff that you have.